Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, in this video we are going to be diving into the Pyramid Forex Trading Strategy. Alright, it's quite an effective strategy and quite an interesting one at the same time. So if you are not very familiar with this trading strategy, then you might want to stick around as we dive into it in a bit. Alright, now this strategy is actually a dynamic approach to scaling into winning trades while keeping risk under control. All right. If you've ever wondered how professional traders build strong positions without overexposing themselves, this strategy is the answer. Okay, let us get started. Now, the Pyramid Forex Trading Strategy is all about scaling into a trade as it moves in your favor. All right, instead of entering a position all at once, you start with a smaller base position and add to it incrementally, forming what looks like a pyramid structure. All right, so just like how we have a pyramid structure, this indicator, the reason why it is named after the pyramid is because of the nature of the strategy. All right, the nature of the strategy is what gives that name, or is what inspires that name. All right, so you will notice that after you add smaller base positions, as you add incrementally, you add more positions incrementally, you're going to have a pyramidal structure on your chart with respect to your entries. Okay, this strategy is especially useful in trending markets, all right, where the price consistently moves in one direction. By adding to your position during these moves, you can capitalize on the momentum without taking on excessive risk up front. So why should you consider the pyramid strategy? By starting small, you minimize your exposure at the beginning of the trade when the outcome is uncertain. For example, we can see that we actually had a bullish trend here, right? We had a bullish move. We had, for all the way from here, we had the price climb up to this point. Okay, so now let's just look back a bit. We can see that we had a support zone around here, right? So initially, we can see that the price was consolidating. The price was actually consolidating around this zone, right? Moving sideways. But if you do some extra analysis, you'll find out that at this point, after the price got to this top, it was as if the price temporarily broke out from this consolidation. We had a false breakout around here, but at least it showed that there was some bullish momentum. And then we had quite a steep bearish move here. And then shortly afterwards, we had a breakout. We had a gap. If you look closely around here, we had a gap in the upward direction. And then we had a retest of this support zone. So there were some signs that a bullish move might be incoming. Now, if you are using the Pyramid Forex Trading Strategy, you might have considered entering a buy trade somewhere around here, perhaps right after this bullish candle formed that closed higher than the previous candle that was a bearish candle. So right after this candle closed above the previous candle, you would have considered entering your first position. Okay, you would have considered entering the first position. Remember that this strategy helps to maximize trends. Okay, trends often last longer than expected. Now, the pyramid strategy allows you to take full advantage of these movements by adding to your position at key points. All right, at key points. And then this method prevents over leveraging, ensuring that your account remains safe even as you build larger positions. Okay, so now the step-by-step process, of course, you have to identify the trend. Okay, so in this case, we can see that we had a bullish breakout, right? A bullish breakout from this bearish move, indicating the start of a bullish trend. Okay, so you can actually also use indicators to confirm trends. All right, for example, you can try to use the moving average, and you can see that this moving average confirmed this buy trend as the price broke above it. Okay, and you can see that it started acting the moving average acting as a dynamic support. You can see the price broke above it, and we had a consistent rejection on the moving average. Okay. Now, when you enter your base position is your initial position. Okay, your initial position should be at a key level, such as a pullback to a support. So if you had wanted, you can consider entering your base position after this bullish candlestick pattern, or you can decide to wait for a pullback to the moving average, and then a continuation. Then you enter your base position. Okay. Now keep this position small to minimize risk. Okay. Now the next thing to do is to wait for confirmation. Allow the market to move in your favor before adding to your position. Look for signals like higher highs and higher lows in an uptrend. Okay. For example, let's say we had our base signal around here, and then you can see that we had a high here, right? We had a high here, right? We had a higher low, because this was a low, right? We can see that we had a low here, and we can see we had a high here. This was a higher low, this was a higher high. Yeah, this was another higher low. So you would have considered adding to your position around here, because a bullish structure has already begun forming. You can see the bullish structure bounded by higher highs and higher lows had already begun forming. Okay, so you scale in gradually. As the price moves in your favor, you can add to your position incrementally. For example, if your base position is one lot, your first add-on might be 0.5 lots. Okay, then your next add-on can be 0.3 lots, and so on. Now the idea is to make each subsequent position smaller than the previous one to manage risk. Okay, and then finally you have to set your stop loss targets, your stop losses, and your profit targets. Okay, so you place your stop loss just below the last key support. All right, the last key support level, or that's in an uptrend, or the last resistance in a downtrend. Okay, so you adjust your stop losses as the trade progresses. So as the trade continues to move in your favor, you can bring your stop loss higher. For example, if we have a new higher low forms, you can take your stop loss below that new higher low. When a new one forms, you can take your stop loss below that new one, and so on. Okay, that helps you to lock in profits while the trade progresses in your direction. Okay. Now, to get the most out of this strategy, keep these tips in mind. The first is to stay disciplined. Okay, it's very important to stay disciplined. Only add to your position when the trend is clearly continuing. In this example, we can see that we had quite a strong buy trend. So as a result of the confirmed bullish trend, you can add to your positions with peace of mind. Okay, in the case of a sell trend, in this case we had a sell trend. After you got your confirmation, and breakout from the moving average, you can consider entering your base position, and then right after the first pullback, you can consider entering your next position, and then again you can consider entering another position. And remember, as you add more positions, your lot sizes will reduce in size. Okay, so just like how the pyramid looks like, you can see as the pyramid is going up, right? As the pyramid is going up, you can see that the horizontal lines are getting shorter, right? As the pyramid is going up, the horizontal lines are getting shorter. So it's the same. As the trend goes in your favor, as the trend goes in your direction, the lot sizes are getting smaller, all right? As you're adding to your positions, it gets smaller. And then, in addition to staying disciplined, okay, try to avoid choppy markets, all right? Try to avoid sideways markets, okay? And then you can use technical indicators. In addition to your moving averages, you can actually decide to add RSI, MACD, or any other indicator of your choice, okay, that can help you to confirm your trend entries and scaling points. And it's very important to backtest before you trade. Okay, practice this strategy on historical data or in a demo account to understand how it works in different market conditions. And finally, stick to your plan. Have a clear plan for how much you'll add at each stage and where your stop losses and targets will be. Avoid improvising mid-trade. Okay, and there you have it, the Pyramid Forex Trading Strategy, broken down step by step. Now, this strategy is a game changer for building stronger positions while keeping your risk under control. If you found this video helpful, hit that like button. It really supports the channel. Don't forget to subscribe and turn on notifications so you never miss out on future strategies and trading insights. In the meantime, thank you for watching, and I will see you in the next video.